Welcome back. We're now in segment 5.4, and in this segment we'll continue our discussion of P&L account. So far we have discussed sales and raw material. We'll now go on to discuss the other items in the sequence that appear in the same data. So in this segment we'll be discussing about stores and spares, power and fuel, direct labor, and repairs and maintenance. So when you come across the term called stores and spares, please note that these items are used in the manufacturing process. They're not direct raw materials, but they are important in the production process. So you can think of examples like catalysts. For example, catalyst is you can classify it under the stores and spares. So what happens in some production processes, some materials called catalyst will be added to speed up the reaction or to make happen a particular reaction. So things like that you can add under stores and spares. Or for example, stuff like lubricants, you can use it in stores and spares. You can classify under stores and spares. And other consumables, even machinery spares, there'll be some machinery spares even there, even those can be classified under stores and spares. So whatever may be the item, we'll club it under a single head called stores and spares. Usually you'll be given the item stores and spares in a company's P&L account. The individual breakup might be furnished or may not be furnished, but if it is furnished, you can use your common sense to identify which is the stores and spares. Usually you'll be given the total head directly. So the treatment is exactly as in raw material. So in the CMA data, we have already seen we start with sales, less excise duty, net sales, and then later we start with the various expenses. So we start with raw material. The next item will be stores and spares. So whatever the figure from the P&L under the head of stores and spares, you can put it in the CMA directly, that figure. And the concepts which we discussed under raw material, right, the concept of matching principle is exactly similar in the case of stores and spares also. So what we are interested is in the consumption of stores and spares and not the purchase amount. This is exactly the similar discussion which we had in the raw material, so I'm not going to repeat it. The exact concept, right? We have to match the revenue and expenses. So only those stores and spares and consumables which go into the products that are sold, only those stores and spares will be incorporating in the P&L. The other stores and spares which were used in the production process, but however the materials could not be sold, will not be putting in the P&L. They will be shown in the balance sheet, and in the next year's P&L account they will be shown under the relevant expenses. So we are taking the example of Maruti Suzuki. So far we have classified the income items and raw material under the relevant rows in CMA data. So we'll continue with that classification. We'll continue with that exercise. So now we are dealing with stores and spares. So here you can see the cost of the stores and spares is not appearing in the expenditure. See, these are all the expenses item. Before this you have the income items, and in the expense items you have all these expenses, but you cannot find stores and spares. So what Maruti Suzuki has actually done is to keep the compact format, right? To have the P&L account in one single format, in one single page. They have classified many expenses under other expenses. So actually if you go to schedule 31, there you can see the breakup of these other expenses. And there you'll find stores and spares. So let's go to schedule 31. So here you can see that under the other expenses there is an item called consumption of stores. So this item you can directly put in the P&L. So 911, or rather 91 this is 911 millions or 91.1 crores. So this item you can put in the CMA data operating statement. So let us do that. So we have already entered the raw material amount. Now we will enter the stores and spares. So 91.9 crores will be the entry under the head of stores and spares, right? So under stores and spares you'll have the entry. Sometimes you can also provide for imported and indigenous breakup. Otherwise you can directly put it in the single head of stores and spares, right? So we'll go to the next item, that is the power and fuel. So the next three items, power and fuel, direct labor, repairs and maintenance, they come in the order after raw material, stores and spares, and then you have these items, right? Power and fuel, labor, and repairs and maintenance. And then we have an item called other manufacturing expenses. That is, items which are not included in any of these heads will be classified under a single head called other manufacturing expenses. We'll come to this later. For now we'll see the items of power, labor, and repairs and maintenance. So what you actually see in most P&L accounts is these items of power, labor, and repairs and maintenance will be given directly in the the P&L account. So you can directly take those figures and put it in the CMA data. Now, when dealing with raw material and stores and space, we spoke of matching principle, right? So we said what matters is the consumption and not the purchase. So is that principle applicable to these three items also? So should we speak of consumption? So the concept of consumption might be tricky to understand in this case of a sort of intangible sort of expenses. So when you speak of raw material, stores and space, they are tangible assets and which you can measure. So you can classify them as spent or consumed and which are not consumed and lying in the godown. But what about the power, labor and repairs and maintenance? So even though they are not directly evident, the matching principle is working in the background. So you need to understand that matching principle is still working in the background, even in case of expenses like power and fuel, labor and other expenses. So take for example, we'll take the example of labor, right? So you know that salary will be paid on the first of every month. So when you speak of the financial year 2012-13, for each month, that is April, May till next March, this is March 13 and this is April 12. For these 12 months, the payment is going to be made on the first of the next month, right? So April salary will be made on May 1st and this will be made on June 1st and this will be made in the next financial year. So this is April 2014. So here again you have to understand that matching principle is working. So what matters is there are two principles acting here. One is the matching principle and another is the accrual system of accounting. So let us first look at the accrual system of accounting. So please note that when we discuss about accrual system of accounting, the actual flow of cash is not material. So this March salary, even though you are paying in April 2014, this is April 2013, right? So even though you're paying this salary in the next month, and actually this is the next financial year, but you have to report it as an expense in the month of March 2013, that is in the financial year 2012-13, because using the services of labor, labor have provided their work, their services, and they're getting paid for the salary, right? So while the work is being done in March and consequently the goods are produced and sold in March, the payment is being made in April. So that is a mismatch, right? So what the matching principle says, if the labor has done some work and goods were produced and sold in March, the expense, that is the labor expense, that is the salaries, have to be shown in the month of March itself, even though you're actually paying them in the month of April. So as per accrual system of accounting, but since the actual cash has not gone out, is a liability. So that amount you'll also be showing in the item of current liabilities in balance sheet. So it's a liability till you actually settle the payments for the labor in the next month, right? So there we are seeing the accrual. So here we are seeing the accrual system of accounting at work. Continuing with the example of Maruti Suzuki, here we can say that employee benefit expenses, that is the direct labor expenses, we have 843.8 crores. This is what Maruti Suzuki has incurred for the financial year 2011-12. So let us see the other items. We are speaking of power. Power we can see under the other expenses we have power. Yeah, power and fuel. So this figure you can take directly, 229.5 crores. You can take it on the power. So power, direct labor, repairs and maintenance is also given. It's classified into plant and machinery, buildings and others, but we can take the direct figure of 90.4 crores. So these three items we can classify under the relevant set of CMA data. We'll take these figures directly as it is and put it in the CMA data. So 843.8 will be the labor cost, right? This is taken directly from the P&L account of Maruti Suzuki. So 843.8 crores for employee benefit, that is the labor expense, that is done. So power and fuel is 229.5 crores. 229.5 crores. This is the power and fuel expense, right? And finally we have the repairs and maintenance, that is 90.4 crores. 90.4 crores. Please note that in this particular example we had a single entry called other manufacturing expenses, which includes repairs and maintenance, but usually you will find in the internal process notes, that is internal formats, analysis formats used by banks, you'll have two separate rows, one for repairs and maintenance and other for other manufacturing expenses. So this breakup you can provide. So 90.4 you can provide in the row relating to repairs and maintenance, and other manufacturing expenses you can show it separately. So banks actually want to have I want to highlight what is the amount for repairs and maintenance, so they'll having a separate row. But in CMA data, usually they'll be clubbed together, so that doesn't matter, right? So in CMA data, if the company provides this information, you can call for the breakup, right? Repairs and maintenance is anyway available in the balance sheet, so you can. So in the CMA data, for example, company has provided CMA data for the year 2012-13. It has said that other manufacturing expenses, including repairs and maintenance, is some 100 lakhs. So then you can go to the P&L account of the company, see what is the repairs and maintenance figures, because your internal format, bank format, has separate rows for repairs and maintenance and then other manufacturing expenses. So you'll go to the P&L account of the company and watch what is this expense of repairs and maintenance. So say it is 2 lakhs. So you'll put the 2 lakhs in the repairs and maintenance and 98 lakhs will put in the other manufacturing expenses. So this you can do. So that brings us to end of this chapter. Here we have discussed the 3 items under the expenses side in the P&L account. We have discussed power and fuel, labor charges, and repairs and maintenance. So power and fuel, anyway, the point is very clear. Power and fuel expenses related to the power that is gone into the actual production process. Please note that there is a distinction between direct expense and then indirect expense, right? Direct expense and the indirect expense. In the next lecture, we are going to discuss something called other manufacturing expenses. So here we are going to clarify what is this distinction. So the distinction is direct expense go into the expenses that are incurred in the actual production process. So expenses that have gone into manufacturing the product will be the direct expenses. Indirect expenses is once the product is ready, once the product is manufactured. Expenses which come after the production, like sales, your distribution, storage, and all this other expenses will be indirect expenses. So this will be dealing in the next chapter, right? So in the next chapter we will be dealing with another item called other manufacturing expenses. See you there.